Up, if anything. We're up about 75 points. 22,440 is where we stand at. It's time for a special segment, Quarter Se Quarter Tak. We bring you earnings expectations from each sector. Today, Sonia is going to tell us what the expectations are for the auto sector. Sonia, over to you.
Well, thanks a lot for that. The auto sector is expected to report strong growth in Q4, led by volume recovery in both the domestic as well as the export markets, especially for the two-wheeler sector. Now, Bajaj Auto has already reported their numbers, and as we saw, Bajaj Auto clocked in a recovery of the export markets, which led to a very strong performance. Sector-wise, if you look at it, the heavy commercial vehicle slowdown is something that's worrying, and it would be important to get a sense from commercial vehicle players on whether this will continue. Now, let's look at the segment-wise volume growth. As I said, the two-wheeler sector has witnessed a healthy volume growth of 25% year-on-year, while passenger vehicles saw 11% year-on-year growth in volumes in Q4. The medium and heavy commercial vehicle volumes declined 7% year-on-year, while tractor volumes declined 18% year-on-year in Q4. Overall, if you look at it, lower commodity costs will definitely support EBITDA margins. However, crude oil and rubber prices have witnessed a sharp uptick in the past 2 months, and this may weigh on the profitability of some of the tyre companies. Now, if you look at the auto stocks, they have outperformed the market this year. In fact, the Nifty Auto Index is up 71% in the past 1 year and has doubled over the past 3 years. Now, this week on Friday, we have Maruti's results. The expectation is that Maruti will see over a 20% revenue growth because of a 13% volume growth and price hikes that the company has undertaken. In fact, operating leverage, benign commodity prices and lower discounts will aid margins for Maruti over the next fortnight. We also have a slew of other results. There's Seat, Escorts, Tata Motors and Bosch that will be reporting their earnings over the next fortnight. But let's leave you with the valuation table, which assumes importance considering the kind of run-up that these stocks have seen. Bajaj Auto now is the most expensive auto stock, followed by Maruti as well as Eicher Motors. Of course, not strictly comparable, but this is how the valuation table looks. Back to you.
Okay, all right. Thanks a lot for that, Sonia. Well, Rakesh Kumar, India analyst at BNP Paribas, joins us on the show. Hi, Rakesh. Good morning and good to see you in. Well, tell us, what are your expectations, from the upcoming result season? And, if you could give us some key takeaways as well that we should be looking forward to.
Hi, good morning, Nigel. As Sonia just now was describing, we think that this quarter is going to be a strong quarter, both on revenue growth front as well as on margin expansion. Barring from the companies which were primarily exposed to commercial vehicle and tractor segments, we would expect rest of the companies reporting strong double-digit revenue growth, and that should translate into sequential margin expansion as well. We maintain our own proprietary commodity cost index, in which we consider all the commodities which typically goes into a passenger vehicle and two-wheelers. And that has been largely steady over the last quarter or so, barring a few commodities moving here or there. On an aggregate, it seems to be largely a tailwind than a headwind for the sector. But that is something which is already known, and as Sonia was highlighting, that it's already reflecting in the share price movement that we have seen over the last year or year to date as well. What would be key from here on is for some of the segments, such as two-wheelers, the ask rate has now started becoming quite high. The expectations are quite high that FY25 should continue to report a strong volume growth, translating into some margin expansion as well. And the companies will have to come back and show the confidence that they can deliver that kind of volume growth. And I think in the results, and more importantly, in the coming months, volume numbers also, that is something which investors would be keenly looking at, is that the kind of pickup in or the sustained growth which many of these segments are expecting, will that sustain or not? Because that's what the valuation have started pricing at.
Correct. Kumar, hi, good morning, and thank you for joining us on the show. I wanted your thoughts on Bajaj Auto because, the numbers were very strong. But as I just mentioned, the valuations are now much more expensive than its peers, right? I mean, Bajaj Auto FY25 PE is almost 28 times, while something like a Hero is still trading at 18, 19 times. Would you be uncomfortable with the valuations, or do you think there's more to go on a stock like Bajaj Auto?
Hi, Sonia. I remember 7-8 years back, these two companies used to trade at valuations very similar to each other, and now there's definite divergence. But there's a challenge when we are looking at the valuation plainly from a PE basis, because it does not capture the transformation a company goes through on a balance sheet and cash flow side. So if you look at Bajaj Auto, their free cash flow generation has remarkably improved, and moreover, their payout ratios have also dramatically improved. And hence, when you look at, say, on a dividend yield basis, the stock had started looking very attractive over the last 1 year when the dividend yield had expanded to almost 4-5%. And that's when we started seeing a very sharp rally in the stock. And now on a dividend yield basis, the stock has reverted to about 2.5%, which is where it used to trade even in the last decade. So now when looked at from the dividend yield perspective, it doesn't look too expensive. At the same time, it's not looking any attractive as well.
Okay, so you have a neutral call on Bajaj Auto? I mean, if you're saying it's not expensive, but it's not attractive either. So are you neutral here?
That's right. Yes.
Oh, okay, got it. Eicher Motors is the other one I wanted to discuss with you because, you know, a couple of months ago, there was this concern where in its space, there were two formidable players coming out with launches, right? Whether it was Harley Davidson, whether it was Triumph. But those did not scale up meaningfully in the Indian market. So those concerns are largely behind Eicher Motors. The stock is now sitting at a fresh 52-week high. Are there reasons to believe that based on earnings, they can build on to their gains? And what is your advice to investors?
So Eicher has a very strong moat in the Royal Enfield brand. And through the model launches, which now they have started doing, they are trying to build even stronger moat around their brand, trying to expand their addressable market, trying to create a ladder for customers to upgrade within their portfolio, and also to reach out to some new segments of customers, especially the young customers. And that is something which is helping them protect their market, which they have been holding over the last decade or so. From here on, while we have seen not a swift ramp up from some of the competition which has come in, part of the ramp up possibly is yet to fully play out as well because the dealerships are still being rolled out and that possibly could continue to create some pressure on at least the market share, if not the absolute volume itself. And also export markets have been mixed for that company. So we'll have to still see how this entire export market expansion as well as the domestic market competition fully plays out. And not just plainly from volume perspective, but also from the margin perspective. Because while the volume may sustain, we'll also have to look at what cost it is coming, especially on the sales and marketing expenses. And we'll have to closely look at how the margin is also trending.
Okay, so that is in the two-wheeler space, right? I want to talk about the kind of pressure that we're seeing in the commercial vehicle space. Why do you think that is? Month after month, there's a degrowth in the space. And, you know, stocks like Ashok Leyland are just refusing to perform because of the slowdown here. What is causing it? And what is your recommendation now on the CV sector?
So around the election period, typically the government investment in the infrastructure and more primarily towards the highway infrastructure typically comes down. And that is something which is impacting the commercial vehicle demand to some extent. They have communicated this to investors as well that the March quarter and June quarter possibly would be softer. And there should be a recovery post that. And that possibly is also the reason why investors are looking at other ideas within the automotive space till the time the elections are behind. Once that happens, possibly we should start seeing a recovery in the commercial vehicle business, as well as the investor interest also coming back in. We do not think that the commercial vehicle cycle has peaked as yet, and hence there's still upside left in the cycle, and hence the stock as well, but possibly a little delayed.
Okay, since we're talking about earnings, right, I wanted your thoughts on whether there is a re-rating in earnings expected for auto ancillaries because of the kind of momentum that's building up with EVs, with EV OEMs coming into the Indian market, many of them outsourcing from the Indian market, like, you know, the Hyundai, Kia, Exide deal, etc. And what would your top picks be now in the auto ancillary space?
Yeah, so within the auto ancillary space, one company that we cover is Samvardhana Motherson. The global business as well as the domestic business has been benefiting from the EV. And they have a sizable proportion of their order book now sitting in EV. But from the overall segment perspective as well, we are still at a very nascent stage when we are looking at the Indian auto anc space expanding into the EV. The domestic demand as well as the export potential is yet to fully realize. So once we are looking at the segment from a longer term horizon, the segment offers a lot of good pockets of investment ideas where investors can definitely look at.
Okay. All right. Any final thoughts? I mean, anything that we left out? We pretty much focused on everything, but we have also Maruti's numbers, right, coming out on Friday. The expectation is there'll be a 20% growth. Volume growth has been pretty decent at 13%. Any thoughts on that stock?
So that stock has been our sector top pick, and the reason were pretty simple. The entire space had seen a rally over the last 1 year, and this was a stock where the expectations were really low, around mid-single-digit volume growth, valuation similar to last 10-year average, in a segment where we are talking about valuations of all-time highs. And this is a very clean private consumption story in India. And hence, plainly from that perspective, it was looking very compelling. And it continues to look quite compelling to us. Even now, despite the rally, the valuations are not looking stretched. The volume growth expectation and more importantly, margin expectations are really benign. Consensus, and including us, we are building hardly any margin expansion over the next 2 years and about mid to high single digits sort of a volume growth, which is what the industry growth has been over the last 2-3 decades. So still Maruti Suzuki looks quite attractive from where the expectation is sitting and how the valuations are currently.
Okay, we'll leave it at that. Thanks a lot, Kumar. Appreciate your time here on CNBC TV18. Let's slip into a quick break. Manish